All right. Good morning, everybody. Today is 11/4/2020, the day after the election. And obviously, as I speak, we still don't know who the president is, or the president elect, I should say. So that's going to make for an interesting few days and probably a lot of craziness in the market, which will be very interesting. Yeah, I stayed up kind of late last night and then realized that it wasn't gonna end, and so went to bed and got up this morning, and of course, we don't know who actually won the election yet. So, good news is by this time next week we will, right? So, anyway, interestingly enough, the market itself has been pretty strong past couple of days, very strong. And as you can see, I have a chart of the S&P 500 up here. And interestingly enough, it's kind of the way that I see this now. You can see whatever I had drawn on here, I took off. So I like to do that every now and just put some new lines on the chart that look sort of reasonable. And this is kind of how I see it right now. That looks kind of reasonable, doesn't it? Just a big old trading range. and so what we have is big run up, and we got this was a pretty good dip here, and then another big sort of quick rally with sort of a breakaway rally there at the end, and a lower high. So we have a lower high, and basically I've just connected the most recent highs and the most recent lows, and to me that looks like fairly reasonable sort of range. And so you can see the strength in the past few days here. And it seems odd to me. The old saying, the market hates uncertainty, right? I mean, you can basically throw that out the window because there's probably never been more uncertainty. I mean, seriously, the election could go either way and it could be contested, right? So, um, very strange, and I don't pretend to know anything about or have too strong an opinion on it. So we'll just have to wait and see what happens. But anyway, so the market from the high to like this low was almost 9%. It was almost an actual correction, right? Like correction's 10%. So, but not quite. And now we've rallied back up and we're within, shouting distance of the highs. Although I would imagine if the market works its way up here, that it'll run into some resistance, right, at this lower high. But in theory, if the market ran up here and consolidated a little bit and broke through, then that'd be pretty bullish, right? And you know that seasonally speaking, we're in a really strong period of time of the year, right? They always talk about the year-end rally and the Santa Claus rally and all that stuff. So, I mean, typically, now some of you may remember 2018, where the market basically tanked at the very end of the year, the fourth quarter. But generally speaking, the market's pretty strong this time of the year. So it'll be interesting to see what happens here. Obviously, first we got to get through the election turmoil, and then we'll see what happens. So, moving on. Well, real quick, let's just look at the cues, just for the fun of it. I got a bunch of stuff drawn on the cues, but I could probably just take all this off of here. I mean, it's not really. I do have the same downward sloping trend line on the cues, though. The Nasdaq and tech stocks in particular were extremely strong past couple days, and last night when the election returns were coming in, the Nasdaq futures were rallying big time. So I'm not exactly sure what that's what that's indicative of, but I think I've heard that like well, I've heard all sorts of stuff, so I won't even get into that. But there you are. So Nasdaq's right smack in the middle of the range there, and could go either way. But that's a pretty strong gap. The market's actually rallying, rallying even more. When I say the market, I'm typically referring to the S&P 500. That's what I consider the market to be. But so without further ado, you guys know that we got down to no open trades, right? We had no open trades. We had a whole bevy of trades that got closed, but with the strength yesterday in the market, with that strength, we ended up. I don't know why my chart just all of a sudden petered out, but with this strength in the market, we had a handful of stocks that triggered, and here they are. And so what I thought I would do this morning is mark up the charts of these 4 stocks that are triggering in today. Actually, we had one open trade that triggered, I believe it was on Monday, and so we'll take a look at that too. But so these stocks, in theory, are triggering in today, as long as they trade above the trigger price today. So that's really the key. So like if a stock, you go to the triggered today list, which by the way is on the pending top of the pending trades page. So you got the pending trades here, and then so the ones that close above the trigger price, trigger in today, appear on this list, which makes it real easy to know which ones. You get up in the morning, you look at the triggered today list, and then that's your focus list for the day. So let's take a look at Walmart. Funny thing about Walmart is, we just had a trade in Walmart, and it had this little pullback here. It's a pretty nice little pivot low right there, and so basically it's triggering in again. And so I'll just go ahead and mark it up real quick here. Now you remember last time I said that I was not a huge fan of. I wasn't a huge fan of Walmart because it can be a really boring stock, right? I mean, it just obviously it's a great investing stock and it's in a lot of portfolios, but for swing trading, it's got it's got a 2% average range, which makes it kind of slow and boring. So, but nevertheless, but the funny thing is that last time, I mean, it had a pretty good swing cycle there, pretty good up cycle. So it was anything but boring. So basically, it's triggering in again today, and the trigger price is 142.25. So there you go, 140. Now here's something kind of interesting about this. Let's see, 142.25 is down a little bit more, like right in that area. Sometimes it's hard to get it exact, but interestingly enough, now see how it gapped down? If it gapped down and then had dropped, if it didn't trade at the trigger price the day that it triggers in, excuse me, then it wouldn't officially be triggered, right? It has to actually trade at the trigger price or above it, right? If it had gapped up and ran up, then it's triggered in, at the open. But there's certain cases where a stock will open lower and drop and then not actually trigger in. So here's a case of one where you could actually got in at the trigger price, right? If this was your cup of tea. So let me mark the initial stop on here, which is 138.50. So that's down here. It's not quite. It's not at the pivot low or the low of the pivot low. It's actually kind of obviously it's calculated, as you know, based on ATRs in the market. So I'll mark that on here. Initial stop 138.50. So there you go. Not too exciting, but then again, not a bad looking stock. be honest with you. Not a whole lot of risk there. Typically, the thing about Walmart, and I mentioned this the last time that it triggered in, was that, it can go for a long period of time, sort of just in a tight range, a couple of percent or whatever. So not too exciting, but then again, it's not, extremely risky either. So there you go. Um, so let's move on here to the next one. Now we got 4 of these things that are triggering in. CoreSite Realty. This is kind of interesting. Typically, here's another case where this particular stock, and by the way, on the pending trades page, you can't see this on the screen, I don't think, but over on the right column, it tells you the average range. And so this one's another 2% stock. This actually does seem to have pretty good cycles up and down though, right? So as of last night when we ran the update, the trigger price was 121.80, which is right there. And so basically, as you know, here's an example of one that gapped up a little bit this morning at the open. And so basically the entry would have been, right in that area, right around the open there. Don't sweat the small stuff. And just as an example, and it's a pretty good looking chart. I mean, it had a lot of sort of zigzag moves, and so it just had a sell off. Now it's rallying back up. Target on this, the official target is 126, right? So I'll show you how this works. This is a pretty good example of how you want to approach things when you get a gap up like that. So there's the target up here, 126. I usually mark the target in a real nice dark shade of green so that we can see it. Differentiated a little bit from the trigger price. So there's the target based on the trigger price of 121.80. Right, and so the open today was 122.75. So let's just call it 122.80, right? Like say you were watching or whatever, and just for simplicity's sake. And so this is how you do it. Instead of worrying about, oh, I wasn't able to get in at the trigger price, which is what you don't want to worry about, you would have had to pay an extra buck for it. So all you do is set your target. And I've talked about this a lot on the shows recently, because, a lot of, at first people, especially like new members get sort of hung up on the target price, like the exact target price. And so, I started calling this the compensation target. And I don't even know if I like that term, but I mean, I don't know what else to call it, but basically you're compensating for a gap up, right? So it's as easy as that, right? I mean, this thing could hit 126 like, this morning, right? So, I mean, this is kind of what you want to see, right? Like you get one of these stocks that triggers in, you buy it right around the open, and then it takes off and rallies up. And of course, this is delayed anyway. These free stock charts started delaying it, but the COR's at 125.53 right now as we speak. That's the real-time quote from over on my other machine there where I have Thinkorswim running. So, I mean, so it's up 3.25% this morning. It's kind of thin volume, but anyway, so there you go. There's the compensation target, well within reach, and a lot of time. Well, I won't say a lot of times, but when you get these gap ups, many times the stock, gaps up and then just takes off and never looks back. So we've talked about a couple ways of doing the entries too. If the gap is, something like this, a dollar gap, no big deal. But if the gap is extremely significant, then what you might want to do is buy a half a position at the open, regardless of what it is, and then set a limit order for the other half at the trigger price, right? So that's a viable strategy, but in this case, not that big of a deal. So the initial stop here is sitting right at 118 to start. In theory, if you get a big long range day on this, something like that, big long range day, that stop could literally like come up tonight, up under here. Or it could easily move up. So it's all based on price, obviously. So looking pretty good, to be honest with you. 125.50 is the quote here, and so that's a pretty nice little pop right off the bat. So that's why you want to. I mean, typically you want to be kind of on top of these things right around the market open if you're looking to get in. So, okay, so we had 4 stocks that triggered last night, and I just marked up the first 2, and so let's move on here. GDS, right? This one's kind of neat because it's actually like breaking out here. So here's another example of a little gap up this morning, but stocks are very gappy these days, and so basically, kind of the way we're doing it really makes sense. The trigger price on this is $87, right? And so basically, it was sitting there on the pending list, and the trigger price moves around on the pending list. It can change, day to day, but this triggered in at $87 even. All we were looking for was a close over the trigger price, which is kind of, this level of resistance here. And so there you go. And so here's another one. The open today was 88.97, call it 89. And so, the target, instead of being, oh, well, here's the thing is this trades like 3.1% average daily range. So the trigger price was 87. The target is 90.75, which it's already hit. And so basically you would just compensate for that by adding the difference between the trigger price and the entry price, which would be $2, right? So let me mark that on here. This is the calculated target. And of course, that's based on, what's based on the calculations. It's based on, the target is based on, the trigger, the actual trigger price. And so the funny thing is, and boy, that seems like, here's what's interesting about this is that, what did I mark? The target, I'm sorry, is 90.75. I knew I was sometimes trying to talk and do this at the same time kind of throws me off. So, all right, so here's what we're doing. The trigger was 87, but the stock opened at 89. So we're just going to add $2 to the target, and that's going to be 92.75. So there we go. That's up here somewhere. It's as easy as that. That's pretty easy, isn't it? And it makes you feel a little bit better about it because you're thinking, oh, geez, I wanted to get into the trigger, but the stock gapped up. And so if you go through like some of the original material, and you'll realize that the trigger price is basically like, that's sort of like the level to beat. It's like a resistance level, or a level that indicates that the market is actually, starting a swing cycle up. I'll just mark this C target, and we'll call it 92.75. Compensation target that compensates for the difference between the trigger and what you would actually paid if you got in right at the open. So there you go. Still looking pretty good. And like I said, the funny thing about this, I'm gonna have to move these as I zoom in. The funny thing about this is that you can see on the Triggered Today page that this particular stock trades at a 3.1% average daily range, right? Which is, it's kind of minimal or whatever. And so as we speak right here, this particular stock is up um, is up 3.8%, right? So it's up like it's up over one ATR, as we speak here. And so, it's another case where, like I just said on the previous one, that a lot of times, stocks will gap up a little bit and then just sort of rip higher. And so you know, it doesn't bother you. Now, if it gaps up and then folds over, then well, that's what you don't want, obviously, but it happens too. It gaps up, folds over, maybe even pulls back for a couple days, and then goes on to make the move we were looking for anyway. So this is looking pretty good too. Can't complain on that. This particular stock, now, I did notice this last night. I wanted to mention this. This stock is releasing earnings on 11/16, right? And so that's important because that we close these positions ahead of earnings. So basically, this is the amount of time the stock has left to make its move, right? We're not going to be in this position any longer and so that's, today and then 2, 4, 6, 8 or 9, about 9 more trading days. So about 10 trading days. But, ideally it'll hit this target, work its way up here a little bit. The trailing stop, which I haven't marked yet, will trail up and it'll turn into a decent little swing trade considering that this particular stock only has a 3% ATR over a month's period of time. So the initial stop here is going at 82.75, which is going to be like in this area right here. So it's a 82.75. It's going to be right about there. Everything about this looks pretty good, tell you the truth. So it's kind of nice to have these stocks trigger in like this and make a big move. Of course, the market itself is just like taking off here. The S&P is up 3% this morning as we speak, and it's kind of, they say the market loves the fool the most people most of the time or whatever it is. A lot of times, it does the opposite of what you would think or make sense. And an undecided election, the day after election day, is sort of, like I said before, the old saying, the market hates uncertainty. And so it's basically, it's doing the opposite of, and I'm sure, there's plenty of people that'll come on CNBC and explain why the market is so strong with all the uncertainty, but it is what it is. So, yeah, it's kind of interesting to see this thing, just blow right through the original target there. But that was a pretty big gap up, a couple of bucks. Good looking stock though. Good looking stock. Everything going according to plan. What would be really amazing is, and see, the target looks kind of close, right? I mean, the target looks close, but then again, this particular stock has, like I said, a 3.1% ATR, and so the targets are based on the ATRs too, and so it is what it is. Anyway, it is what it is. So I was looking at this. This is a weird high, like sort of back here. Like it's literally run up to this previous high from back in July. Had a big run up into that. It's kind of been a sideways stock, and so in the big scheme of things, I mean, it's kind of breaking out of a big consolidation range that's been like 6 months, and so it may actually get some. if it can like clear this little area here of this high, then there's probably not really, and even where it is now, I mean, there's probably very few buyers, and so it's kind of blue sky. If it can a little something going here, it's like goes into blue sky territory. But all right, so last but not least is this one, BRKS. Here's one that wow, this last trade on this, it's kind of a little fake out here, right? You see this? This is one that kind of a rare thing, but just immediately hit the full stop, right? So it had pulled back, it was trying to rally, closed above the trigger price, and then well, hang on, trigger price 52.50. I may be mistaken on this. This might have been open 52.53. Okay, so I see what happened here. Well, no, hang on. The 52. Huh. This may be a little anomaly here, right? Like this might I have it marked here, but it might not have actually triggered in. Because if you notice here, and see, this is kind of the beauty of the system. So let me go back in time here. If the trigger was 52.50, we were looking for a close above that. So on 9/1, it closed at 52.35, and so this day on 9/2, it closed at 52.83. So it triggered in, but check it out. The very next day, it gapped down, never traded above the trigger price, and so according to like our little rule set, the high was only 52.37, so it never actually triggered in, and it took this winger here. So I just have it marked on here, but never actually triggered in that day. And so that's kind of, that's why we do that. Now, today is a little bit different story, right? Because the trigger price is 53. Well, hang on a sec. This is trigger price 53. So let's see. Yeah, something doesn't look right with this. Something does. The trigger price is saying $53, and so this should not be on the triggered today list. So I'll have to. That's interesting. Yeah, I didn't look. Obviously, last night I was paying attention to watching the election and that. So when these data tables updated, typically I have them marked up. Typically I have them all marked up, but I didn't even. I have to look at that. So I mean, if you were looking at that this morning, you would realize that there was some little bit of an anomaly, and so it hasn't triggered in yet. So I'm not sure why it popped on the triggered today list, but yeah, I guess we'll have to take that. And it says the stop is also showing 0. So yeah, something isn't right there. That's just that's a little data error, but so we'll get that off there. So basically, the three stocks that I went over: Walmart triggered in, COR triggered in. Look at that, I already poked the target, and GDS triggered in. And then the BRKS that's gonna come off of there because it hasn't traded. It didn't close above the trigger price. So, and I can see, I didn't even notice that at first, that the stop showing 0 means that there was like a data error or something on that. So no big deal. Oh, the last thing I wanted to mention was when we ran the update last night. This Ballard Power, this actually was on the triggered list, right? This is another sort of like little anomaly, but this thing was on the triggered list. Looks pretty good, right? But check it out. Earnings are coming out tomorrow. And so that's like the one little thing that the automated system just doesn't have data points for is when the earnings are coming out. So we're right in the thick of earnings season here. So basically, when these stocks, when a stock triggers in or whatever, we have to go back and look to see like when are the earnings coming out. And so this is kind of interesting. I don't remember where the actual trigger price was, but it would probably been, it'd probably been up here, like, 16 and a quarter or something like that. So this may not have even triggered in at all, right? But basically it appeared on the triggered list, realized that earnings are tomorrow after the bell, and so just basically gets deleted right off of there because there's no point in, I mean, we have a rule set. There's a certain set of rules, and there's obviously there's plenty of room for discretion within that. But as you guys know, one of the rules is we don't hold a stock over earnings, and so that's a that's a pretty hard set rule. That's like one of the rules where there is no discretion, and since they're releasing earnings tomorrow after the bell, there's no point in trying to swing trade this thing. So looks like we had a pretty decent, we had a decent trade in it back over here. It was kind of a wild and woolly stock, but this latest little pattern is pretty decent, really. Nice little sell down, and it's kind of turning the corner. But you can see this morning, and this is one of those like green energy stocks or whatever, which looks like some of these are selling off today. So it's hard to know really, and I think I see a lot of like, shuffling of certain sectors and stocks and that sort of based on the election outcome, which is kind of crazy, but so it is what it is. But anyway, yeah, so it looks like we basically just have the three stocks that triggered in, and then of course there's the one that we hadn't looked at yet, the open trade CL. I hadn't marked this one yet. This one triggered in, CL triggered in what, a couple days ago? Let me go to, triggered in on 11/2, and the trigger price was 79.75. So let's see, here we go. So this was the trigger date right here, and then it gapped up yesterday, but so here's the trigger price. 79.75. Closed above it on Monday. The stop on this, the initial stop, kind of way, it wasn't really, it was basically just below the previous day's low. So that's, I mean, this is a big move for this particular stock. Was this, oh, Colgate Palmolive. Okay. I don't know why it was the first thing that came to mind was Clorox, but this is, this is Colgate Palmolive. Okay. So, initial stop. It's kind of odd to see the initial stop like literally like just before the previous day's low, but that's where it is. So 77.50. That looks 77.50. It's down just a little bit there, right? And so yesterday there was the gap up. Not extremely significant though. So there's I guess I could put that down here. I mean, sometimes depending on the chart, it's a little difficult to actually get these where you want them. And then, of course, when you zoom in or zoom out, it makes a big difference too. So I forgot I put initial. That's initial stop right there. So looking good on this. Target 82.50. Which was right there. And obviously there was that gap up, so we'd had a compensation target on this, which I'll figure out here in a second. So let me just mark the original target, 82.50. Whoops, typo there. And all right, so let's see the open here, 80.88. So I mean, it's basically a buck, so a little over $1. So you go, 83.60 or whatever. I'm not gonna not gonna try and count the pennies in my mind. I've only had like 2 cups of coffee this morning, so stayed up late watching all that election nonsense. The funny thing about that was C target. I just put and I might actually calculate this out just so it's like accurate to the penny, but um and it's roughly, roughly in that area, a little over a buck and some pennies or whatever. And so you can see, I mean, it's just this is what you want to see too, and this is why there's a good example of why not to be afraid of jumping in on the gaps, because I mean sometimes stocks, they just, I mean, and this is an unusual sort of move for this particular stock, right? I mean, it kind of sold down a little bit, had this little pivot low, and then this particular day there was a massive gap up and a huge range, and maybe this was earnings. That very well could have been. So this would have likely been hanging around on the actual pending list for a while. Back over here, it was on the pending list, and typically, they sell off like this and then consolidate at a lower level and then begin to turn up and they trigger in at a lower level. But during earnings season, you can get some weird sort of stuff, right? And so that looks like what's happened here is that we got sort of it triggered in at a level that was a little bit higher than you would have thought of, but just goes to show. I mean, this particular move that you see in Colgate-Palmolive here doesn't look like anything else on the chart. So they must have come out with earnings and it's just ripped higher. So anyway, there you go. So I'll take a look at that anomaly on the chart. Actually, hang on a sec. If I go to the open trades here, let me do that real quick. Yeah, so that yeah, if I go to the open trades, so you can see that there's a problem right there. So I'm surprised I didn't notice that last night, but I was in the middle of making dinner and watching all this election stuff and all that. So I just the data tables updated, went through the ticker symbols real quick and didn't notice that. So this is going to come off of here. No big deal. And so there you go. So basically we have 4 open trades right now, right? This one will come off of here, and quite frankly, they're all looking pretty good. Right? So this is the only one that was an existing open trade, and so we had the other 3 trigger in. They're all looking pretty good actually, and so there you have it. So S&P 500 had a big sort of well, geez, since the open, I mean, S&P 500, they ran it up 60 points since the open. That's the other thing about right now is we're getting like these extreme moves, right? The volatility, well, I don't say volatility because you think, when you hear volatility, you think VIX, but the range expansion is extraordinary in the market. I mean, even last night in the futures, I mean, there was, what we're seeing right now is like, that the futures are, even, during regular market hours, we just saw a 60 point, roughly 60 point run up in the market, and now it's pulling back a little bit, and it's 20 something points off the high. And so we could see moves of, 50 S&P points in either direction. I mean, the S&P's up 80 points right now, right? 2.3%, but like I said, these are just massive moves in the futures. So, and we're seeing big ranges, big ranges in the market, and so that's probably going to continue. So, anyway, that's my show for today, and I'm going to tune into some of this new stuff and see what's happening. So I thank you for tuning in to my show. And when we come back next week, we will know who the president-elect is. And so we'll see what happens. We'll see what happens with the market and in between now and then. And so same time, same place next week.